Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 20th of June. Starting off with the FTSE 100, where we're still marooned in this range between the 200-day line 75.34 and the 50-day moving average 77.20, and really we're looking for an end-of-day close outside those parameters. The April resistance line there around 76.65, so that might give you an earlier trigger in terms of a potential move to the upside, although obviously you can see there's a solid wall of resistance there at 7800. On the downside, hoping that the lowest we'll see is 7520 at the floor of that rising trend channel from August last year. If we do break that line, then one would expect 73 to 7400, basically retesting the March support area and also the old December support for this market. RSI at 44, we have an RSI failure at neutral 50, which can be a sell signal. So far, I suppose if you're short, you won't be that uncomfortable given the way the market is. Moving on to the DAX, which has been a rather stronger partner in terms of the indices over the recent past, but even here, come back a bit, gap down there today and touching the floor of that rising trend channel. The risk now is that we fill the gap down towards 15,800 and even might have to test down to 15,700, which was the turn of the month support for this market. But let's see if we can remain above 16,100 on an end-of-day close basis, which is the floor of that rising trend channel from September. While we're above that, we still have the chance of 17,200, although it doesn't feel like it by the end of next month. But support certainly in the 15,700 area initially. Moving on to Bitcoin. The Dow was on holiday yesterday, so we're looking at Bitcoin and next. And here, trying to break that line of resistance there from April. That was, and that is around the 27,000 mark. We've got the 50-day line there as well, around 27,000. So end of day close through 27,000 hopefully would then give us a potential move towards 30,000 over the rest of this month. The positive here is the way that we've bounced off the old 25,000 resistance. Now as new support. That was there in August and February, and the RSI now comfortably above neutral 50, approaching the 52 level. So this could be a potential attempt at a breakout, although obviously at this stage the upside could just be up to 28,000 and then we fail again, etc., etc. Want to look at a market that I haven't looked at for quite a long time. It is the pound, and here the market is still squeezing higher, or has been squeezing higher, after the Liz Truss affair back in September, where we approached parity. Since then, we've actually probably squeezed with those shorters there getting squeezed over the last several months. We've got a line of resistance there from back in 2021, and that is around the $1.26 level. So above that, we're still looking for further upside, even though it's a bit flabby today on price action, and we could hit the top of that rising trend channel from August last year, as high as $1.35, maybe by the end of this August. But the key here is holding above the $1.26 area and the blue 50-day moving average, not far below it. So 125, in fact. So let's see if we can do that. First sign of trouble would be a break back below the old May peak around $1.2680. So let's see how we go on that. In terms of gold, which I'm also throwing in here, here we've got situation where everyone and their mother is saying that this is going to break through $2,000, etc., etc. Nice support, though, has to be said, around 1950, which was the old January resistance area. So that is a plus, and we've got a rising trend channel again from August last year at that level, based at that level. Want to see the RSI push back above the neutral 50 level. We've had several failures, or at least 3 or 4 failures, for the RSI below neutral 50, and also obviously failed below that falling 50-day line. So if one wasn't contaminated by the general bullishness, then one would probably say there is a risk of a break of 1950 and a move down towards the 1880 area, which was the resistance in early March. But early days yet, easier just to wait for either a break of 1950 or a break of 2000, which is not actually perhaps very helpful. Moving on to the stocks, and a stock which I wasn't expecting to ever cover again is Cineworld, which seems to be remarkably full of life at the moment. Here, unbelievably, we've got not only a bear trap from below the April support there at 0.72, but we're also nudging the 50-day moving average for the first time since February. that does suggest, if one forgets about the fundamentals, that we could at least hit the last high in May around 1.36 pence, and maybe do that over the next week or two. But unbelievable state of affairs there on Cineworld. It almost looks as though the company will be saved. On to Chill Brands, which has had quite a retracement to 50%, almost 50% retracement from the highs seen just last month. Interesting now that it looks like we're at the bottom of that rising trend channel from November. Hammer candle yesterday, which is positive, and also closing above the rising 50-day moving average would also be positive. We bounced off the floor of that gap from last month as well, which is another plus point. So it looks as though there could be a little bit of a push higher here, possibly up towards the 10 pence area, which was not only initial June support, but also resistance on the way down. So maybe there is a potential technical trade for some there in Chill. If you are cautious, you wait for the RSI now at 40 to break back above 50. Another stock which may be about to turn around after falling back from its highs early in the year is Conroy Gold. Here it looks as though we've got a rising trend channel base, so the base there around 14 pence. It's always difficult to get the exact number there, but the RSI very oversold around 20, and so it wouldn't take much to bounce back to at least into the upper teens and the 50 and 200-day moving averages over the next week while we hold above 14 pence. You can see that the support back in November was also 14 pence, so we just had that blip at the end of January going into February below 14. So 14 looks as though it is a natural support for the shares. Going on to a stock which has had decent news today, Cobra Resources. Here, a messy chart, but the main point to note here is the mild uptrend line in the RSI window, the unfilled gap to the upside through the 50-day moving average, which tends to be a decent signal of a turnaround. And the main resistance there at 1.6 pence, that's the level to break for us to get back into what was 1 year resistance at 2 pence plus, hopefully by the end of next month, if we have a decent follow through above the 50-day line. If you're cautious though, I suppose you're just waiting for 1.6 pence to break. Onto a stock which looks like it's on the front foot at the moment. We've got Caracal. Here the rising 50-day line has finally pushed the shares well into the 40s. We've got an uptrend line in the RSI window as well, bullish divergence line, and the 0.6 area that we've been looking for the last couple of months looks like it might finally be on tap, even as soon as the end of this month. Above 0.6, a gap to fill up to 0.77, but I suppose we don't want to get too carried away unless we break that 200-day moving average at 0.52 relatively quickly. The stock which has been in the wars, but maybe reviving itself now, is EQTEC. And here the situation is that we're looking at a triangle base, and that's been in place. That triangle has been in place since March. Bear trap, hopefully from below the, just bear trapping now, the old 0.18 pence level, which was the initial May support. Above 0.18 on an end-of-day close basis, we could head up to that March resistance line projection at 0.28 as soon as the end of next month. If you're cautious, once again, probably wait for an end-of-day close above the 50-day line at 0.195. But end-of-day close above the old lows should be enough to signal the shares are on their way. Moving along to fusion antibodies, which, if you look closely, has been improving over the last few days. Here you can see that we had neckline resistance broken around 7.25 pence. Above that, we were looking for 11, 12, that kind of thing, which would be a partial retracement of that massive fall that we had last month. And the shares so far above that 7.25 pence level seem to be trying their best to recover. The old high there, 9.87 pence. So an end of day close above that maybe would give us 10, 11, 12 over the next week or two. Interesting chart at Horizonte at the moment, which I haven't covered quite some time. Here we've got a situation where we've got a rising trend channel in place since this time last year, pushed through the 50-day line at 139 after a bear trap below it last month, and that suggests that we could head up to the top of the rising trend channel at 180 as soon as the end of next month. So rising 200-day line as well, helping the shares along. On to Hemogenics, which has managed to rebound in a reasonable way over the last few days. The sort of the main event here really was closing back above 1.2 pence from a very oversold area. Still looking now for the top of the range around the 2.3 pence area by the end of next month. Upside valid while we hold above the overnight support, or the today's support, around 1.4 pence. So let's see if we can stay above that over the next day or two. Moving on to MyHealthChecked, which is another stock which has had quite a sharp retracement from last month's peak near 30 pence, for basically nearly halved the share price. But it looks as though we've got a rising trend line, trend channel base based around 16 pence, and above that we could see the shares at least head back towards the 200-day line around 22 pence over the next few weeks. Next stock is one which has been jumping well in the recent past. We've got Panthera, and the picture here is that we're sort of between our first target there around 6.1 pence and the second target around 7.5. End of day close above 7.5, and we could be looking for as high as 12 pence by the end of next month, and what looks like it's quite a dynamic situation there. The gap close buy signal yesterday helps as well, especially while we remain above 6 3/4 and that gap top level. Onto a stock which has been requested, which I was going to cover yesterday, but chickened out. Here you can see that we've got Red Rock having fallen within a broadening triangle. The current situation is that we're looking for the shares to hopefully progress within the closer channel that I've just drawn. So bouncing off the 50-day line, currently at 0.16. If we can hold that, then it could be a retest of the 200-day moving average area at 0.3 as a best case scenario. But there's just the feeling here, I suppose, that the shares may have to retest the lows there at 0.13, 0.12 just one more time, even if they don't go lower than that this time. Last two, first one is Serinus, and here you can see that we've got the shares bouncing quite well above the 50-day moving average. That's normally a decent signal, and the sideways shuffle above the 50-day line, that suggests that we could head up to 7 pence as soon as the end of next month, while we remain above the floor of that rising trend channel from April at 4.3 pence. Bullish divergence as well, so maybe this is finally the time when Serinus delivers a reasonable rally. Finishing off with Thor Explorations, where I see people getting excited about the stock trying to find its feet at the moment. Here we've got a rising trend channel base from back in February. Ideally, the shares remain above 16 pence and then head up towards the top of that rising trend channel from back at the beginning of last year as high as 23 pence, maybe on a 1 to 2 month view. The shares obviously been rather slow over the past year, but maybe this is the time when they start speeding up. That's it from me today. More updates tomorrow.